Welcome to another episode of Pinsky Law Presents. And today we're going to tackle the dreaded topic of the statutory spending limit. This limit often causes fire district commissioners and treasurers a lot of headache. So today we're going to take a clip from our 2020 Law and Management Conference where we train 120 to 150 fire district commissioners and treasurers in the 6 hours required by the New York State law for training for fire district commissioners. So sit back. Here's what you need to know about the statutory spending limit. But remember, the law creates something that's supposed to put the brakes on maybe bad judgment by some districts and says, we're only going to allow you to spend a certain amount of money. This is very unique for New York State fire districts. So we have to learn something, which you are now going to learn, the statutory spending limit. And let me tell you this. If your lawyer and accountant don't understand or aren't able to explain to you the statutory spending limit, you need a new one. If your lawyer doesn't understand the statutory spending limit, you need a new one. Whoever that may be, I hope somebody understands this. And it's a great question when you're interviewing lawyers. Can you explain the statutory spending limit to us? I think it's important. Why? Because this is really important to fire districts. So let's go through it. First of all, let's break it down. What is the statutory spending limit? Well, it's a limit on spending set by law. It's in statute. It is a spending limit issued by law. We like to use a lot of words, but they're pretty simple. There are three parts to the statutory spending limit, and this is where it starts getting complicated. We have to determine what the spending limit is. We have to then determine, once we know what our limit is, if our planned budget exceeds the spending limit, because if it does, we might not be able to spend what we want to spend. We might have to cut our budget back. Or we might have to go back to the voters, which you can do before September 15th, and have them approve an increase to your statutory spending limit on a one-time or a constantly recurring basis. And so that's the first two. Then three, or C, then we're going to determine, well, wait a minute. Our limit is $100,000, and our budget's $150,000. But $50,000 of our expenses aren't included in the limit. What you're going to learn right now is that some things are outside your spending limit. Your limit doesn't include all of your expenses. It's most of your expenses, or many of your expenses. And I'm going to give you a heads up how to figure out what they are. The expenses that are capped are those which you have almost no control over. Almost no control over. You don't set them. In other words, you can't really abuse it. The ones that are inside the limit that you're capped on, I don't know if I said this right, the ones you're not capped on are what's outside the limit. Those are the ones you have no control over. The ones you're capped on are the ones that you do have control over. That's what your limit is, the ones you have control over. So let's review how to do this. Here's the rule. The rule is fire districts are allowed to spend only $2,000 for the first $1 million of taxable assessed valuation. Well, there's three big words. You can then spend $1,000 for each additional $1 million of full valuation of taxable real property. Oh my God, what are these words? Well, they're big words. Let's break them down. Because if I speak really fast and talk about total taxable assessed valuation and statutory spending limit and how much you can spend, you're going to be really confused. I want you to be experts. So here's what we're going to do. We need to figure out how to compute your statutory spending limit. To figure out your spending limit, which is $2,000 for the first $1 million of taxable value and $1,000 for every $1 million thereafter, we have to figure out what? The taxable valuation of your district. How does taxable valuation get made up? Well, let's look at the words. A valuation of property is what an assessor determines your property to be worth, right? Your houses are taxed at something. But taxable valuation is different than valuation. Your house may be taxed or valued at $100,000. A church may be valued at $100,000. But a church has no taxable valuation, correct? They're exempt. So let's take some examples to make you an expert. Let's assume you have one house in your district. It is worth $1 million. It is a private-owned house. What is the taxable value of the house? $1 million. There's only one church. What is the total one house? What is the total taxable valuation of the entire area, which has only one house? $1 million, right? There's one house worth $1 million. The taxable, and in this case, total taxable is $1 million. Okay, now there are two houses. The taxable valuation of each is $1 million. Two houses are in your district. You have very small chance of them burning, right? Very simple fire department. There's two houses, each have a taxable assessed value of $1 million. What is the total taxable assessed valuation of your district? $2 million. Okay, and now because people need God, we build a church. Church of whatever, I don't care. We're non-dominational here. And so the church is valued and assessed at $1 million. So we have a church at $1 million. We have two houses at $1 million each. What is the taxable value of your district? Taxable value of your district. I'm sorry. Let me do it this way. What's your assessed valuation of your district? $3 million. Assessed valuation is $3 million. Your total taxable assessed valuation is $2 million. Right. Very easy. You want a really easy way to figure it out? Look at your bill. It's on all your fire district or your town tax bills. It will say assessed valuation, taxable valuation. Some might even say exempt valuations. But your total taxable assessed valuation. Okay, well, what do we do with that? You have one house in your district. It is worth $1 million. That's all you got. Everything else is exempt. It's assessed, has a taxable value. Your total taxable value is $1 million. How much money can you spend from your fire district? $2,000. Now we build a second home. It's worth $2 million, taxed at $2 million. We have a total taxable assessed valuation of $2 million. Right? Two houses, $1 million each. No church. How much can I spend now? $3,000. Hey, this is pretty good. Now, life isn't that simple, but there's some easy ways to get around this. Now you have a church that's worth $1 million. How much can you, or valued at $1 million? Your total taxable assessed valuation is still $2 million. How much can you spend? $3,000. It's only on the taxable assessed valuation, the taxable assessed valuation, right? Okay. So let's practice something. You're going to think you can't figure this out so quickly, but you can. And I am dead tired that we make this easy. Let's assume we have a taxable assessed valuation, or if you would like to say a lot of words, a total taxable assessed valuation at $100 million. And by the way, we're on a fully assessed valuation method. I'll talk about that a little bit. How many millions are in 100 million? This is really easier than you think. How many millions are in 100 million? 100, right, there you go. And the answer, if you don't even know, is on the board. So the limit on 100 million. So there's 100 millions we have to figure out. I get 2,000 on the first million, do I not? Then I have 99 more millions that I get to spend 1,000 each. My spending limit is 101,000. See that? 101,000. So what's the trick? Move the decimal 3 spaces from the right and add 1,000. 100 million becomes 101,000. Let's do an example. So let me ask some questions. What's the statutory spending limit for 200 million? 201,000. How about 500 million? 15.4 billion. Just kidding. But same rule. Write it out. Write out 15.4 billion, 15 billion 400 million. Move the decimal 3 and add $1,000 bucks. That's how you do it. There's one kind of exception to this, but you still have to get to the same place. The exception, frankly, is what happens on a partially assessed or not fully assessed valuation. There's a, kind of like we tax it at 89%. I don't know why anyone does that. I don't know why we don't do fully assessed. You have to do the conversion and get it to 100% valuation. And you divide it by whatever you divide the number by whatever the assessed valuation conversion factor is. But in any event, don't worry about that. It's once you know what it, 89%, whatever, you can convert it. We can help with that, not a big deal. I don't know why everyone isn't on a what's called fully assessed valuation. But always ask, right? Don't assume you're on a fully assessed, because if you do this on an 89% valuation, your numbers are going to be way low. Okay, so you get the trick, right? That's how we come up with the statutory spending limit. So let's do an example, just to knock it home. Budget comes to $150,000. You have a $150,000 budget. Assume for the moment the only source of revenue is taxes. You have no reserve funds, you can't bond, we have just taxes. Assume your limit is $101,000. Assume your limit, you can only spend $101,000. What do? You've hit your limit. Well, as I told you, your limit is only on the expenses you can control, not on the ones you can't control. This is called inside and outside the limit. So what you need to do is you need to create a T-chart. I'm going to give you have an example, right, in your book. You should have an example of a T-chart. I'm going to give you one. I made this up. This is my thing, but this is how I do it. It works. You have to take your budget and divide it between inside and outside. Do we care what's outside the limit? What outside, meaning what you're not capped on. No, it's outside the limit. We only want to make sure that within your $101,000, right, is that everything inside the limit is equal to or less than $101,000. Outside the limit, who cares? So we're going to create a T-chart, which looks like this. It's got inside, outside, right? The inside can't exceed the statutory spending limit, and the outside, who cares? So what is outside? How do we know? Well, Town Law, Section 176, paragraph 18, I believe, lists about 20 or so things which are outside, meaning the who cares limit. So what we're going to do is we're going to go through your itemized budget, and we're going to pull out everything that's inside and outside, and you're going to read it. And you're going to say uniforms. Well, that's inside. Okay, that goes on the inside. Training, that's on the inside. Now, there is no list on what's on the inside. There's only a list of what's on the outside of the budget. So let's look at that. Payments for water supply are outside the budget. If you have to rent hydrants, those are outside of the budget. I'm just making sure I don't have any questions that people are asking online. Okay, so I will answer your resignation question momentarily. Outside, payments for water, outside. Do I have any control on what somebody charges me for payments on hydrants? Do I set that? No, they set it. They tell me. Lease to supply water, same thing. Payments on bonds. Did I really have control over that? I want to buy a fire truck. Yes, I had some control, but bond payments were approved by the voters, and we're going to talk about that. Bond payments were approved by the voters, right? So it's already approved. Bond payments, one of your biggest expenses, outside the limit. Compensation of paid fire district officers, secretary, treasurer, any firemen, whatever, outside the limit. Right? Salaries, outside the limit. That's good. That's a big expense, potentially. Retirement fund contributions, LOSAP, outside the limit. Voters already approved your LOSAP program. Self-insurance plans for VFBL, you don't set those. That's usually the county. Districts don't usually or ever have them. I don't even know if you can, but counties have them. Outside the limit. Every one of your insurances, do you set your insurance rates? No, you can choose your insurance benefits, right? $1 million, $10 million, $50 million. And by the way, I am seeing horrible over expenditures in insurances. If you are upstate and you have $20 million of liability, I am sorry, I have not seen any judgments where $20 million is being handed out for personal injury, and you pay a lot for it. I mean, thousands upon thousands. You do not need a $20, $30, $40 million insurance policy just because you were sold one. Look at your insurances. And it's a good thing to do, look at the insurances with a lawyer. It's an hour exercise, but I'll tell you what, you do not need a lot of what you're being sold. Just because your insurance agent comes to you and says, you know, here's what I think you need, here's what we see, doesn't mean it. And there's a lot of good insurance companies. VFIS is one. I mean, there's a lot of good insurance companies. But they're fire-related insurance companies. So whoever they are, there's about 3, maybe 4 of them that are common in our area. You should probably use one of them because they are used to insuring fire departments. But that doesn't mean, right, they're still working on commissions. Right? Salespeople are still working on commissions. The more you spend, the more they, right? So you don't need everything. We just saved one of our clients in Putnam County $7,500 a year, right? Because I looked, I said, why do you need $20 million of coverage for liability? Why isn't 10 enough? And it was half the price. So you definitely can save a lot of money looking at it, and you should. And you should always bid it out. There's ESIP also, Utica National. They will beat each other constantly to death. So allow them to bid against each other. Okay, so, and you don't have to bid insurance, but you should have them compete with each other. So liability insurance, LoSAP programs, amounts paid into a reserve fund. Monies you are going to put into a reserve fund are outside the spending limit. I believe you should not put your money into the reserve until the end of the year. The comptroller might take a different view, saying, look, that's what you budgeted. But the reason is you may have run out of money and you may not have it to put in. But here's the thing. If you're up against the statutory spending limit, that money has to go into the reserve fund, right? Because if you moved it, let's assume your budget's $101,000 or your limit's $101,000. And you have $10,000 that you were going to put into reserve. If you need that money, not for reserve, but to spend in this year, that means your inside budget's $111. You weren't allowed to spend it. If you are up against your statutory spending limit, you have to, at the beginning of the year, put your money into the reserve. Does that make sense to you guys? Because it's outside the limit, you can't use it. Now, let's assume you have a $150,000 statutory spending limit. Your whole budget's only $100, and you have 10. It doesn't matter, right? If you're 10 going into reserve, that doesn't matter. But you definitely, if you are at your limit and you have money going into reserve, you cannot move that money back into your budget. That would be kind of taxpayer fraud. Cost of the accountant to perform the annual audit. The annual audit, and if you're over $300,000, you have to have an annual audit. If you're under that, you don't. But the annual audit, not your accounting services. Accounting and legal services are inside the limit, right? But your audit is outside, and audits can be anywhere from $7,000 to $15,000. They're expensive, right? They're expensive. I don't think we should have to have them every year. I think it's a waste of taxpayer money, but that's not the law. All your insurances, tax anticipation notes. A tax anticipation note is something where you need money at the beginning of the year. You spent it all from last year. You don't get your budget money until February or March. So we can borrow at like 0.05% or some ridiculous amount paid monthly. You borrow money to get you through the first year, month or two. Your vehicle insurance, monetary rewards, I don't know, reward for whoever stole something, I guess. Vehicle fuel, not heating fuel, but vehicle fuel outside the limit. State insurance fund, if you have paid employees outside the limit. Now this is a little confusing, but does anyone protect a territory outside the district for money? Good, okay, because otherwise I was going to say something that's useful to no one. So let's assume your budget is, your statutory spending limit's $101,000, and let's assume your budget inside the limit is $101,000, but you also get $50,000 from a fire protection contract. You can spend that $50,000 on anything you want, whether it's in or outside the limit. In other words, your inside the limit now goes up from 101 to 151 because you can spend those fire proceed contracts on either items inside or outside the limit. So that's basically free money. It basically increases your statutory spending limit for the duration of that contract. That's an easier way to say it. Your capital gains realized on the investment of assets and reserve funds. Now, that shouldn't be a lot because you shouldn't be doing anything risky with reserve funds, please. But if you have gains, you don't, those are outside the limit. So you technically could take interest or increase stock value and spend it on stuff, but that's so complicated. No one does that. And bonds and such, outside the limit, as we said. Gifts given to a fire district. Now, the question comes up, is a gift a grant? What if you get a grant? Is that in or outside the limit? I believe a gift is equal to a grant. I haven't yet seen an opinion from the comptroller on that, so that could be subject to change, but I'm going to say a gift is a grant. It's outside the limit. That's my belief. Insurance proceeds are outside the limit. So if your truck got wrecked and somebody paid you, that's outside the limit because you're replacing something and the money's coming from outside the budget. So in order to exceed the spending limit, I've done these resolutions for a couple of districts where they need to permanently increase their limit. You've got to have voter approval by September 20th. As you know, you need a vote 27 to 34 days beforehand. You need 27 to 34 days notice. So that means, right, in August, early August, we're having a resolution to hold a vote and giving notice of a vote to increase our statutory spending limit. Now, you tell me. You go to the voters and say, we're asking you to increase our statutory spending limit to X per thousand or whatever. Do you think they're going to have any idea what you're talking about? Not a chance, right? Not a chance. So you might want to hold a hearing. You might want to put a little something in the paper. They are not going to know what you're talking about. So I would try to educate them. Okay, now you can increase the limit in a single year if you want, or it could be repeated. So there's ways to do that. There are certain things you can increase the statutory limit for. It's pretty much everything you would want to do that for. I'm not going to spend a lot of time on this. One, I think our brains are starting to be mushy after being here for many, many hours. But you can increase the statutory spending limit and spend it on almost anything.